When Bitcoin goes down by 50%, that is a bear market for sure. The question everybody wants to know is how long will it last? It's still a macro asset. It's still subject to these macro factors, and its correlation to the stock market should continue to be expected. Now, what is my honest, unfiltered opinion about Bitcoin and its price and where it's heading? The fear that I feel in my gut is pretty high. Then what the hell does it matter what the oil price is until you remove their ability to build a nuclear weapon? I'm actually expecting Trump to elicit chaos as much as he possibly can. What I want to discuss with you guys today, starting out, are two charts that Johan put in his piece. The first here is this SOPR ratio. Now, this ratio gives us an indication of how much realization there is going on in the market on the profit side or the loss side. Now, on the bottom pane, you can see that there are these two red boxes outside of this one large green box. So what are we looking at here? Well, the green box that you're looking at is when the SOPR ratio is in bull mode. And that period of time is essentially the ETF approval period up until sometime in 2025 when the market started to roll over, late 2025, I should say. Before that, Bitcoin was in a bear market, and currently Bitcoin is in a bear market. That is categorical. In this chart, what he's showing you is that the SOPR ratio right now is in bear mode, and it doesn't show any signs of recovery. By itself, this tells us that the market is taking losses. It means that on rallies, you have a sell the rip mentality. It means that investors that own Bitcoin and are fearful of more down moves, they sell any rally in order to capture less of a loss on their position. And how do we know that it's less of a loss and not less of a gain, assuming that they bought a long time ago? So whether they sell at 70,000 or 100,000, they're still in profit. Well, while that is absolutely true, that there are people that those that are selling now, there are some that are selling at a loss because they bought higher, or they're selling at a gain because they bought lower. The information that we can take from the SOPR ratio is that on aggregate, traders that are the most active are taking losses. So the detail here for this specific metric that we need to integrate here, or that I need to explain to you guys to understand that, is that what we're looking at is a short-term holder SOPR. Basically, it means that these are traders that have been active in the last 6 months. So what's going on with them? Well, obviously, if they were in the market 4 or 5 months ago, they are selling at a loss. And that's what you see right now. You don't see traders, especially these short-term traders, holding on and hoping to get out at a profit. What they're hoping to do is get out at a smaller loss than they might have faced on an unrealized basis over the last month. Now, speaking of the last month, Bitcoin has finally had a positive return month in March of 2026, albeit the number is practically zero. So at the margin, there's some improvement in the Bitcoin market, especially coming off of several consecutive monthly losses. Bitcoin finally in the green, but that green line item, it's basically zero. So I don't want to make a much bigger deal out of it than it is. I want to compare really quickly Johan's framework to TBL liquidity and explain why we need both. TBL liquidity is a macro indicator. It is derived from the Treasury market, the banking system, and the dollar versus other fiat currencies, or DXY. Johan's framework is built from on-chain indicators, capital flows into Bitcoin-related instruments. It is also looking at technical indicators, such as the 200-day moving average. Now, when we assess Bitcoin's market, we can look at the macro factors, which are their exogenous factors, or we can look at the endogenous factors, or we can look at both. And that's what we are preferring to do. Now, TBL Liquidity did give us advance warning that we are in a negative risk appetite condition. Our indicator did that on January 14th. The first indication that it was rolling over came on Christmas, December 25th, 2025. And so what we saw is volatility starting to build, and TBL Liquidity rolled over, gave us a sell signal, and gave us an advance warning of the massive drawdown between the 90s and below 60. The price actually hit 59K at one point in the beginning of February. Now, when we think about comparing TBL Liquidity to Johan's framework, there is one minor aspect that is mirrored in both indicators, and that factor is volatility. So Johan's framework includes VIX. VIX is, of course, the implied volatility from the options market on the S&P 500 index. TBL Liquidity has MOVE, which is not VIX, but it's a volatility measure for the Treasury market. So in this way, both indicators do account for volatility going on in the outside of Bitcoin world, but that is where the similarities stop.